Alrighty, guys, welcome back. I have the headset charged. You guys should be able to hear me fine. We locked in when the headset died there. We locked in our Beyond trade. We made a Beyond trade this morning, 10:30, or excuse me, 10:30, I mean October 30th, 2019. We got 10 contracts. We paid $2.80 a contract. Small trade, $2,800 trade. As you can see here, net amount $2,805.16. And we sold it a couple hours later for $3.41. That came out to a 3.41. Divide that by 2.8. That became a realized profit of 21.79%. So we locked in a quick, beautiful 29% gain right here. 21.79% gain. And that was a beautiful day trade there on Beyond. So quick, realized Beyond November 1st, 88 strike calls. Locked in a quick $600 profit on that, and that was a small trade, $2,800 trade. So that wasn't bad at all. And now what we're doing here is we are looking for our next day trade setup. We're waiting for the Fed announcement. We are live. We should be live. Can you guys hear me fine? Alrighty, so let's take a look. Adobe, as you can see, Paula was talking about that. I was telling her on October 11th and October 15th we came up to the 50 there before pulling back. So the next day or two is going to tell us a lot with Adobe. I like Adobe though. If we take a look, she doesn't report until December. When was it? 12th? I think it was December 12th. Let's take a look here. We'll bring that up. ADBE. Well, look, nothing for October, nothing for November, and we go into December and we see we have earnings on Thursday, December 12th after the bell. So December 12th earnings, that means we could get up to December 6th without going into earnings. And if you take a look here, the 275 strike calls are extremely cheap, $9.57 a contract, $957. And if we take a look at the Adobe chart here, there's no question in my mind that we're going to try to get back up to that, between 290 and 300 area. If we go out a little bit further here, we can see we had some nice support here, right around 260 a share. We're bouncing off that support, starting to climb. We got the MACD cross now, which is great. Let me see what's going on here with Benzinga Pro. I'm not hearing anything yet. Let's refresh this. Want to make sure that's going on fine here. Alrighty, let's see. Netflix option alert, 295 call sweep, 596 contracts at $1.56. Alrighty, guys. So we are set up. We are ready to go. Let's see. Coming up, the Fed rate decision. I think you guys should be able to hear that now. Let me see. Let me just test something out quick.
When I need to grow my business, I use Fiverr.
Can you guys hear that ad right now?
Programmer for my website, writers for my content, just search.
Writers for my content. Did you guys just hear that? Because I'm trying to make sure everything's live here. Everything's going fine. Alrighty, guys. So here we go. We got everything set. I got order entries ready.
Fed changes Fed funds
Fed
rate to
changes
1.5%
1.5% to 1.75%.
0.25 points to 2.25%.
Fed cuts rates, guys. Breaking news, Feds have cut rates. Let's see, we should see a market bounce here. We should see diamond and breakout momentum. I'm going to take a look. S&P futures are dipping after that announcement, but I think we might see a rebound. 8 to 2 for the Fed funds rate action. As you can see here, Qs are selling off. We're going to give it a little bit of time for markets to sink in here. Let's see what's going on.
0.25 points.
Every Sunday with stocks to trade.
Fed hints at pause after third rate cut of 2019. Fed strikes will act as appropriate from the policy statement. Says will monitor incoming information as it assesses appropriate policy path. Points to global developments, muted inflation, and cutting rates. Fed contrasts strong household spending with weak exports and business investment. Fed says labor market remains strong, economy growing at moderate rate. Rosengren and George dissented, favored holding rates steady. Bullard supported rate cut after dissenting in previous meeting.
Alrighty, guys, giving this a couple candles. As you can see, we're still getting the bounce here. They were talking about the futures dropping here, but we're going to see. I think we're going to get a nice little pop here. We'll see. They just said the
futures
economy
now
is
at
growing moderately.
30.2850.
S&P futures pulling back a little bit here, still within the zone though from the announcement, waiting for that clear direction. We get a candle above the 50 SMA, or if we get a candle below 270, we're going to be jumping into some either puts or some calls. Also, what we're going to be doing in a couple of minutes here, we're going to be going over our watch list, and we're going to be looking at some good, some swing trades for this week's or possibly next week's expo based on this Fed rate decision. So we have a lot coming up here. Let me see if we can annotate now. I want you guys to see how great this is now. So basically, what we're looking for here with the Diamond ETF here is we're waiting for a candle above or below this area. So we're waiting for a candle below 270, let's say 270.20. We're waiting for a candle below to possibly enter into some puts. And if we get a candle above, we're to be entering I don't know why I spelled entering calls if we get a candle above this box here, consolidation box. So we just got some big news. Let's see what's going on here, and let's see if we can make some trades. We're going to be going down the watch list shortly here. Actually, we could do that right now. Let's take a quick peek, go through this. This is a today 1 minute charts. Let's go through it. We're going to go down the watch list here and just look for some good setups. So this is the today 1 minute. If we see anything in breakout or breakdown momentum, we are going to be day trading live here. So keep a look, guys. If you guys have anything on the move and you want to let me know, please let me know. Amazon here. So we're going to be seeing some larger candles this afternoon now that the decision has been released. So keep an eye. Really important, guys. Let's continue to go down this watch list. We're going to keep doing this. We're going to find a day trade. We're going to enter into a nice day trade here if we see an opportunity, which there's no doubt we should see some good opportunities here. Citigroup, CMG. Here's Cisco here. I don't want to look at a swing chart. I was going to look at a possible swing trade on Cisco, but it's just way too much going on right now for a swing trade. I'm looking for a day trade. Let's see here. Disney. Today 1 minute. XP came right down to support. Facebook. Facebook might start to break out. We'll keep that on the watch list. Let me write that down on my notebook here. So what I like doing after a big decision like this or big announcement, Facebook at 186.67. This is at 2:05 p.m. So I'm going to be looking at that. I'm going to be seeing where it's coming. And we got to keep an eye on that quickly, though, because if that starts breaking through the 50-day. So Facebook here, what I'm looking for specifically with Facebook, let me put this on the annotation software. So if I'm looking at Facebook here, what I'm personally looking for, I want to find a candle above this 50 SMA right here. So see that 50 SMA? If we get a candle above that, I'm going to be entering into that trade on Facebook. So still have a nice trend higher here, still on the climb, still looking good. You know, it's just now we have to see what's going on with the Fed, what's going on with the markets, the diamond, the Qs, the SPY. See what's going on. We are going to be able to make some great day trades today. Just giving it some time to make some moves here. And probably waiting for Powell to come and speak after. So, see, but stay with us, guys. We're going to be doing some live trading here as soon as we see the setups that we're looking for. Alrighty, let's continue to go down this watch list for now, see any day trade setups. And if you guys see anything, please go on the YouTube chat or on our website in the live trade room and let me know what you guys see. And we can bring it up on the screen here, take a look, and possibly make a trade on it. Gold's getting a little pop here in the past minute or two. Google not doing too much. It's been in consolidation for about the past hour. It's been in the NTZ for quite some time today. Not doing too much with Google. Let's see what Google looks like on a swing chart. That's looking great for entry today. I think I might enter into Google today. Actually, let me write down Google for a swing. I put down on my notebook when I write down a stock like that, I write down let's see, 1258.46. I write down DT for day trade, ST for swing trade. You know, that way I know what I'm looking at. That way I could find the best of breed on my watch list and then further analyze it through the option chain with either the calls, the spreads, whatever it is we're looking to buy. We're going to analyze that and see which one is the best option. Are we going to go with the calls, the spreads, you know, butterfly, condor, whatever it is we're going to go, it's going to be based on those levels of support, resistance, and with our trade plan, either the breakout momentum or the breakdown momentum cycles and phases. Let's continue to go down. Lily's finally getting a little pop here on a today 1 minute. That might be day tradable. Let's take a look at the daily chart here. Lily's looking good. That's looking really nice here for a possible swing trade. Let's take a look though and see what they're looking like. Would love to get in something. We're in all cash right now. All cash. Except the Google earnings spread that we had,
FCAU,
that's worthless.
FCAU, Fiat Chrysler.
Qs are
Reuters
getting a
says
pop here.
proposed
Big
scheme of
pop on the
Fiat
Qs.
Chrysler
Take a look at that.
Peugeot
Diamond's probably
tie
getting
up
a nice breakout now as
envisages
well.
FCA paying
Let's see.
special
Let's go
dividend
through
of
this
five and a
again.
half billion euros to its shareholders. That according to
Facebook getting a nice
Reuters
pop.
sources.
There it is.
That's
There goes Facebook. I want
FCAU
to jump
Fiat
into
Chrysler.
Facebook. I'm probably going to go with the November. When do they report earnings? I'd love to get into an earnings trade on Facebook. You know, their guidance probably. Their earnings are today after the bell, huh? Alright, so let's see. I'll do a quick day trade on it, I guess. 187.50. Look at how expensive they are, though. You can't do a day trade on something like that. Alright, Qs. Qs we can make a nice swing trade on for this week's Expo if we wanted to. Let's see what the 196 calls are going for. $1.28. That's not bad at all either right there. Markets are getting a little pop here. Dow's in the green. Nasdaq's trying to turn green here. All right, let's go through this watch list one more time really quick here. See if we find any good day trades. There's a lot of them going on. I'm just trying to find the best. Here we go. Apple, AAPL. I usually don't trade Apple. I really don't, but this chart's looking good. Let's make sure no earnings today. AAPL. AAPL. They have earnings today as well, so that's a no-go. Son of a gun. Alright, let's continue to go down here. AMD, not doing anything on a 1 minute, 1 day. Amazon, big breakout there. Nice. We're going to be able to capture that. Let's take a look quick at the 3-month daily. That's looking good. When does Amazon have earnings? They already had earnings, right? We played their earnings trade, right? Yes, we played that. They're gone. They're out. Alright, Amazon, AMZN. Let's see. What do we want to do here? What do we want to do? What do we want to do? AMZN. Let's take a look. Are we going to do a call or a spread? Let's look at the swing chart first. We got to be quick here. She's moving. So she's been holding the 20. We have a nice consolidation. Close it or stop it. Be 1750. We could even tighten that up by the previous day's close. So we could have a stop of 1763. Nice breakout here. Nice climb. Let's look at the day chart now. Still in the breakout momentum cycle. If we get up to resistance for the day, that's going to be around 1780. That's still a 7-point climb for today. So if we take a look here, 7250 calls. Let's look at the open interest and everything first. Okay, spreads. I'm going to do a spread on it. Buy to open, sell to open, call. Let's take a look here. Expo November 1st. Come on, come on. 1772.50, 1775 vertical bull, 1.35, 2.5, divide that by 1.35, max net gain of 85%. So 85% compared to, if we go, let's take a look at the 1 month daily. If we got up to 1790 and we got to 1770, it's going to be less than 100% return. If we target was 1790 and we got to 1770, the most of these are going to be worth is $20. All right, yep, this is the best way to go here. Let's see if we can get this for 1.35. How many contracts do I want? Let's make a $2,500 trade. 2,500, divide that by 135. That's 18.52 contracts. Let's just round that up to 20 contracts, and that's going to be a, let's see, 20, multiply that by 135. That's going to be a $2,700 trade. Happy with that. Let's jump in. She's at, well, let's see if we could get it for 130 now. Let's see. The net debit, 130. She did not execute on the Amazon. Order status, live. Let's change that order. Let's change that order to $1.35. $1.35, submit, place order. That order is live. She is still not executed. That order is live. Let's see if we moved it up to $1.40. If we paid $1.40 for it, max gain would be 2.5. Divide that by 1.4. Still a 78.57% return. All right, let's change that. She's on the climb there. 1.4. Let's see if we could get her for 1.4. Fill. Let's see, that order is live. 1.4. We went all the way up to 1.4. She's still not executing. Wow, she's going to break out here. All right, let's see that. Maybe we could go with the 1777, 1780. That's going for $1.25. Maybe we could do that. Pick up a nice little steal here. I want to make this a larger trade. The markets are breaking out. Let's make it a $3,500 trade. You know what? $4,000. Divide that by 130 max. So that's going to be 30 contracts. 30. 1.25 will go up to 1.3. Submit. Come on, enter. Let's get in. There we go. She has completed. That order has just filled. Let's cancel the other order. All right, that one was canceled. We are now in. Currently, we're in the 1770, 750, 1780 vertical bull call spread for the November 1st Expo on Amazon with 30 contracts. We paid $11.60 for the long calls, and we sold the short legs for $10.30, resulting in a trade that cost us 11.6 minus 10.3, so $1.30. So we paid $1.30. The max this spread could be worth is the difference between the two strikes here. So 1770, 750 to 1780, that's a difference of $2.50. So if it could be worth $2.50, we paid $1.30. 2.5, divide that by 1.3, that's a max net return of 92.31%. I'm very happy with that, very pleased with that, and I think that's going to be a golden ticket for this week's Expo, which would be a beautiful weekly paycheck trade. And let's now take a look. She's still on the rise, still climbing. And see, this is what's really important here. You see, we're long. See, here's a plus and then a minus. So as long as Amazon's above 1780 a share, by this Friday, we have max net gains, and she's still taking off. She's still climbing. This is looking incredibly well here, guys. Market's climbing. Qs are taking off. I'd love to jump into a day trade as well here. This is a nice climb, but we have big tech earnings after the bell, so you have to be cautious because if they miss and the market takes a dip, then these are going to be basically worthless tomorrow. So let's see, 196.50. Let's look at that. That's going for about $1.15. Let's pick up 20 contracts of that at $1.15. Buy to open, place trade, and we are in. We are in the queues. We have 20 contracts. It's a decent sized trade, $2,250 trade. Guys, our Amazon spread is looking good. Everything's looking great right here. Now we have to keep our ears open for the news, what's going on, because that's going to be a major factor here on our trades. We got to follow our trade plan. If you're new with us and you're not sure what our trade plan is, you're going to have to be watching our trade plan first before you're making any trades. You have to know what you're doing. And if you guys need to take a class with me to learn our trade plan, just message me and I will set you up today with your schedule for your classes. So just let me know if you want to set up your classes. Go to our Facebook and go to our Facebook business page, Santarelli Trading Exchange, or you can private message me on Facebook, whatever you'd like. Let me know you're interested in the classes and I will book you in our calendar today. Other than that, guys, you know our trade plan. Those of you that have been with us, you just got to follow your trade plan now. Watch for those retracements back to the 10. Watch for the consolidations and the next breakout and breakdown momentum cycles. Okay, so right now we're going to keep an eye on. Let's see what Facebook is doing. That was one I was going to enter earlier. Wow, that still had a big breakout there. Big breakout. Remember we were talking about it. We said if she had a candle above the 50 SMA, that would be our entry point. And if you go back, rewind to the beginning of this video, you'll see it. So we saw that big freaking candle right there, started to climb, and she's still in breakout momentum. And as you can see, here are signs. Let's zoom in a little bit on this so I can draw on this and teach you guys a little something about this trade plan. Alrighty, so now where is my pen? Here we go. Let's take a look. Alright, so we'll keep that. So obviously you could see here, here's Facebook, right? We had the breakout momentum right here. Let me make that a little bit smaller. So we had the
WMT, Walmart. The information says Walmart is considering selling its 15-year-old Voodoo on-demand video service. That's Whiskey Michael Tango.
Okay, so right here you can see we had the breakout momentum. Here is the breakout momentum, and then here is the breakout momentum, right? And then here's the next breakout momentum, and now we're going to be looking for the next breakout momentum. But now let's take a look at the consolidation areas. Here is an area of consolidation. Oh, son of a gun. Okay, so the yellow box here, this is consolidation. Oh, I don't know what happened there. I just erased all that by accident. But anyway, guys, so that's consolidation. You know, you could always see your areas of consolidation. They're very easy to come by. And then here is your profit taking. Your profit taking phase within the cycle, it usually comes to either the 10, 20, or the 50 SMAs on the drawback. So that's what you're watching for. And with our trade plan, it's so easy because the first candle with the body below the previous candle, that's a sign that you're now having a reversal and the breakout momentum might start the profit taking phase within the breakout momentum cycle. So it's really important there to know that trade plan and know when your entries, your exits are, know where your stops are and your targets. And with our trade plan, it's clear and decisive signals that you're getting with these trades. So like I said, let's see now if we hold this 10 SMA, if this candle's green and starts to climb, that's going to be a confirmed, breakout momentum phase then coming up. If she holds here, I'm still listening to Charlie on Benzinga Pro. Listening to the news is so important right now, guys. It's super important as a trader. You got to know what's going on. There you go. There's that candle on Facebook that's holding that 10 and continuing to climb there. There it is. There's the next breakout momentum phase within the breakout momentum cycle. We called it before it even happened there because that's our trade plan. We're either retracing back down to the 10 or the 20 SMA, getting up to that resistance and then pulling back. So that's what you're looking for, guys, and that is how our trade plan works. So we're in our trades now, and what I'm going to be doing today, especially in the afternoon here, I want to find a really good swing trade, possibly for this week's expo, the November 15th monthly expo, or even going up to the December 20th monthly expo. I'm looking for some swing trades for some paycheck trades. So my paycheck trades, usually they're anywhere from $5,000 up to $25,000. That's the size of the trades. So they're usually lower risk and decent reward types of trade setups. I'm looking anywhere between let's say 40 to 70% return on those trades. And if there is a lot of confirmation and the markets are looking good and the trend is our friend, when the breakout momentum cycle phase, then it might even be a larger trade. And hold on, let me fix this here. I do this on the WebEx so I can annotate right on the screen. I have a, what is it, 65 or 70 inch ViewSonic commercial TV here, which allows me to draw on it and give you guys updates as we go along here. The Amazon, if we're looking at the swing chart here, our stop is going to be, if we want to be a tight stop, we have our stop at 1765. Let's see. What is Google doing as well? Now the 20 is creeping up here. And see what that does. We're not in a Facebook trade. That was one we were going over. What was the stock I just wanted to check out here? Google. If you guys have any stocks you want to check out and chart, just let me know. Like I said, be glad to go over them. Jorge Nunez says, let's go over BYND. Jorge, BYND, did you get in the BYND trade with us earlier this morning when we made that trade? We got in that. We sold that for some really nice profits. Wow, she got all the way up to $90 a share today. Wow, that's incredible. Incredible. Let's see here. Let's look at the BYND. Do you guys remember what BYND strike did we have? Do you remember? Was it the 88? I'm not sure. What strike did we have on the BYND trade? Does anyone know? See. I don't think where's my picture of it? I think I shared it in the trade room actually. Let me see here. No, Vinny, I did not jump in Facebook. I just got the trades I told you guys about, Amazon and Q's. Let me see. I want to see what our BYND trade. Okay, BYND, we had the, here it is right here. Here's our BYND trade. We bought the 88 strike call for November 1st. Here's the 88 strike call right now. The 88 strike, let's see, let's get our pro back up there. The 88 strike is at 335 and we paid 280 and we sold it for 341. So we actually sold it for more than what it's going for right now. But if we take a look here at the columns, if we change this to, let's go to days range, add, okay, and then you'll see the days range here, which tells us the highs and the lows. So that 88 was worth 394 at the tops. So 394, I only missed out on an extra $500. Not totally upset with that. That's not much. But that BYND trade was really nice, Jorge. And if we take a look, let's go to BYND. She still looks like she's going to have a nice climb. Actually, that's going to be one I want to jump into for a swing as well. Thank you for bringing that back up because BYND does look like a nice swing trade here. Let's see if we pick up the November 15th. We could pick up the 85.7715, so 100. All right. Yeah, there's a good chance she's going to retrace back up to 100 or climb back up to 100. So I'm going to jump into BYND again. I'm going to go with the November 15th. I'm going to go with the 85 strike call. Let's see. I wish I could do the 90. Yeah, you know what? I will do the 90. So you know what? I'm going to get 10 contracts of this. This is going to be a $4,800 trade. So we'll put it a limit order at 4.80. She's not going to fill at 4.80. She's climbing now. I'll do it at 4.9. 10 contracts. That's a pretty decent trade there. So buy to open. And we are in. We are in it. And we are going to win it. Alright, so here are the trades we've just made. Let me share them with you. And here we are. So we have the Beyond trade. This trade is a $4,800 trade. We have the Q trade. That's a $2,000, $2,100, $2,200 trade. And then we have the Amazon, which we pay what, $1.30 for? 130, multiply that by 30. And the Amazon trade is a $4,000 trade. So now what we got to do is we got to start managing these trades. Our Beyond trade's already up 1.13%. And these trades here are probably going to make us around 15 grand, I'd say, if they go our favor and our way, our direction, what we're looking for. So that's probably what I'm going to be in the lookout for, around a 15 grand profit. So let's see, 5, 6, 7, 8, 9, 10. Yep, between 10 and 15 grand. And our Beyond is already on the nice climb there. So thank you, Jorge. Jorge Nunez. I haven't heard you before. You know, you're very active in the YouTube chat, and I appreciate that from you. And what did you get? The same expo, Jorge? Did you get the November 15th? $155, 3.2% on Beyond. Let's take a look. And we're still on the climb now, up $200 on Beyond. We got to find out what Qs are doing here. Let's take a look at the Qs chart. We got to be very vigilant of our situation and of the charts right now, because the Fed is announcing, he is talking. I'm watching him on the other screen here.
Fed's Powell begins
Fed's
news
Powell.
conference.
He's starting his news conference right now, guys, so be on the lookout. Be prepared. I'm going to look for him on YouTube. I want to watch him live because he's a market mover for sure.
Visita is a wonderful
Powell
tool in
says
the
today's
fact
cut
that
in
I
interest
don't have
rates
to
was
be
insurance
sitting
against
and
ongoing risks.
Based on facts and objective analysis.
Can you guys hear Powell
Today, we
on
decided
my...
to lower the
Did
interest
you hear
rates
him
for
in the
the third
background now,
time this
Powell
year.
talking? Let me know.
We took this step to help keep the U.S. economy strong in the face of global developments.
Tell me yes in the
and to
trade room
provide
if you
some
can hear him in the
insurance
background
against
here.
ongoing risks. As I will explain shortly, the policy adjustments we've made since last year
Powell
are
says
providing
believes
and
Fed
will continue to provide
says Fed believes
meaningful
monetary
support to the
policy is in a
economy.
good place.
We believe that monetary policy is in a good place. The U.S. economy is in its 11th year of expansion, and the baseline outlook remains favorable.
Crude
The
futures
overall economy is
crude
growing at a
futures settle
moderate
at
rate.
55.06,
Household
down
spending
48
continues to be strong, supported
cents.
by a healthy job market, rising incomes, and solid consumer confidence. In contrast, business investment and exports remain weak, and manufacturing output has declined over the past year. Sluggish growth
Powell
abroad
says
and
Fed
trade
continues to
development
I don't
expect
like
the
the looks
economy
of
to
that
expand
side of
at
that.
a
I'm
moderate
selling the
rate.
Q calls
Looking
now.
ahead, we continue to expect the economy to expand at a moderate
see.
rate, reflecting solid household spending
So,
and
okay,
supportive
wait, hold
financial
on.
conditions.
Let's listen.
The job market remains strong.
Job
The
market
unemployment rate
remains
has been
strong
near half-century
right
lows for a year and a half. The pace of job gains has eased this year, but has remained solid. We had expected some slowing after last year's strong pace. Participation in the labor force by people in their prime working years has been increasing, and wages have been rising, particularly for lower-paying jobs. People who live and work in low and middle-income communities tell us that many who have struggled to find work are now getting opportunities to add new and better chapters to their lives. This underscores for us the importance
For me, please let me know. Can you guys hear me and see everything still fine? Please let me know, because right now it's saying that it's there's a problem at my end. Let me know if you guys could still hear and see. All right, great. And you guys can see the screen as well, right?
Monetary policy operates
770.
with a lag. The full effects of these adjustments on economic growth, the job market, and inflation
Powell says the current
will be
stance of
realized
monetary
over
policy as likely to
We
remain
see the current
appropriate.
stance of monetary policy as likely to remain appropriate, as long as incoming information about the economy remains broadly consistent with our outlook of moderate economic growth, a strong labor market, and inflation near our symmetric 2% objective. We believe monetary policy is in a good place to achieve these outcomes. Looking ahead, we'll be monitoring the effects of our policy actions along with other information bearing on the outlook as we assess the appropriate path of the target range for the Fed funds rate. Of course, if developments emerge that cause a material reassessment of our outlook, we would respond accordingly. Policy is not on a preset course. Let me end with a few words about our technical monetary policy operations. In January, we made the key decision to continue to implement monetary policy in an ample reserves regime. In that operating framework, we control the federal funds rate primarily by setting our administered rates, not through frequent interventions to actively manage the supply of reserves. In the transition to the efficient and effective level of reserves in this regime, we slowed the gradual decline in our balance sheet in March, and we stopped it in July. In response to the funding pressures in money markets that emerged in mid-September, we concluded that it would be appropriate to maintain over time a level of reserve balances at or above the level that prevailed in early September of this year. To achieve this ample level, we announced on October 11 that we would purchase Treasury bills at least into the second quarter of next year, as well as continue temporary open market operations at least through January. These actions are purely technical measures to support the effective implementation of monetary policy as we continue to learn about the appropriate level of reserves. They do not represent a change in the stance of monetary policy. In particular, our Treasury bill purchases should not be confused with the large-scale asset purchase programs that we deployed after the financial crisis. In those programs, we purchased longer-term securities to put downward pressure on longer-term interest rates and
Powell
ease
says
broader
Treasury
financial
bill
conditions.
purchases shouldn't be
In
confused with
contrast,
large-scale
increasing
asset
the supply
purchases.
of reserves by purchasing Treasury bills only alters the mix of short-term assets held by the public and should not materially affect demand and supply for longer-term securities or financial conditions more broadly. Thank you. I will be happy to take your questions.
Michael McKee with Bloomberg Radio and Television. So I guess the question is this it? Do you consider rates to be accommodative enough now to achieve your goal of sustaining the expansion? And as far as Global Wall Street's primary question, what kind of change in the economy would cause you to reassess? Some sort of significant deterioration in what?
So what we've said, to repeat, is that we see the current stance of policy as likely to remain appropriate as long as incoming information about the economy remains broadly consistent.
Powell says
with
the
our
performance of the U.S. economy, particularly the household
and
sector,
we say that really
has
because
been
both
strong.
the performance of the economy and the stance of policy. The performance of the economy has been, particularly the household sector, has been strong, has been resilient, with low unemployment, attractive levels of job creation, wages moving up, labor force participation moving up, household confidence, and solid gains in many measures of consumer spending. The manufacturing sector, particularly manufacturing and also investment in exports, have been weaker, but overall we've seen moderate growth, a strong labor market, inflation moving up. We see the outlook as for more of the same. We also see the risks to the outlook as perhaps having moved in a positive direction over the course of this intervening period, although some things remain to be seen. So that's the economy. Turning to policy, we've moved the stance of policy over the course of the year the year to a more accommodative stance. And after cuts at the last 3 meetings, the federal funds rate is now in a range between 1.5% and 1.75%. We feel that policy is well positioned to support the outlook that I described. So you ask what it would take, to move, and as I mentioned, we're going to be watching all factors, and if developments emerge that cause a material reassessment of our outlook, we would respond accordingly. But that's what it would take, a material reassessment of our outlook.
If I could follow up, if the markets decide that you need to cut rates again, will you be forced to follow?
We'll be looking at a full range of data about the economy.
Powell
and about
says
the
it would
risks
take a
to the,
material reassessment
risks to the outlook.
in the
And
outlook for the
I've
Fed
given
to
you a
change
sense of what
policy
our outlook
stance.
is. It's for moderate growth, a strong labor market, and inflation near our 2% objective. If something happens to cause us to materially reassess that outlook, that's what would cause us to change our views on the appropriate stance of policy.
Heather? Hi, Heather Long from the Washington Post. You just said that the risks to the outlook are moving in a positive direction. I'm wondering if you could specify, is that on trade or are there other matters? This morning, we obviously learned that we've now had 2 quarters of contracting business investment, which would seem to be moving the outlook
NSA,
in
November
the
saying
other
the Alpha
direction.
shares resume trading
So in
now
terms of
after
risks, what I was
reporting their
referring to
earnings.
there, the principal risks that we've
34.40
been
off the low.
monitoring have been really
34.49.
slowing global growth and trade policy developments, as well as muted inflation pressure. So I was really referring
That's November
there
saying the Alpha.
to trade developments. We have that.
Reuters reporting that
phase one,
Fiat, Chrysler, and
potential agreement
Peugeot
with China,
owner
which,
PSA agreed to merge.
If
Now,
signed and put into
Dow
effect,
Jones reporting that
would have the effect of reducing trade
Peugeot
tensions
and Fiat Chrysler
reducing
have agreed
uncertainty,
to
and
merge.
would bode
That,
well,
according
I
to
think,
their
for,
sources.
business confidence and perhaps activity over time. So that has the potential for being an improvement in the risk picture. Brexit, I would say as well. it
PSA
appears
board approves
that
merger.
the risk
Fiat
of
Chrysler
a-
board meeting late Wednesday.
a no-deal
Official announcement
Brexit
expected
seems
Thursday.
to have materially
Fiat
declined.
Chrysler
I think on
chairman
both
John
situations,
Elkann to be the chairman of the
there's
merged
plenty
company.
of risk left, but I'd have to say
Peugeot
that the
CEO
risks seem
Carlos
to have
Tavares to be the
subsided.
CEO
You ask about business investment, and
of the
that's
merged
right. Business
company.
investment has been weak, and today's reading was weak as well.
Peugeot to pay $3 billion
it was-
to
it
its
was
shareholders
broad
from the
across,
sale of its
across
Mauricia
equipment
stake.
And other parts of the all parts
Again,
of business fixed
Dow
investment
Jones
were
reporting
weak.
that
That's consistent with what we've
PSA
seen. But
and
that's
Fiat
the economy
Chrysler
we've
have
had this year.
agreed to
What we've
merge.
had is an economy where the consumer is really driving growth, and personal consumption expenditures
Shares of
were
Fiat
almost 3%
Chrysler popping to
in this
the highs
quarter,
now,
in this first reading for the quarter. So
$14.56.
overall, we see the economy as having been resilient to the winds that have been blowing this year.
Can I just follow up quickly? I mean, there's this concern that I sometimes hear that with businesses have cut investment, and are they going to turn around and cut employment? If they continue to
Powell
be
says the
concerned.
U.S.
Can you give a
consumer
sense
is
of how the
driving
committee
growth?
Is thinking through that possibility?
Yes, so that is a risk. That's a risk that we've been monitoring, but we don't see it yet. We don't see rising initial claims or layoffs or anything like that. But the risk you mentioned of the weakness in the manufacturing and export and business investment parts of the economy getting into the consumer side of the economy, we really don't see that. What we continue to see is good job creation. Unemployment has declined again, and the household survey is now at a 50-year low, has been at very close to 50-year lows for 18 months now. So it's a very positive. The consumer-facing companies that we talk to in our vast network of contacts report, that consumers are doing well and are focused on the good job market and rising incomes, and that's their principal focus. So that is the thing that's pushing the economy forward, and it doesn't seem to have been affected so far by weakness in the other areas.
Italy's economy minister says
Gina
government
Snyder,
following the
Times.
FCA,
Thank you for my
PSA
questions.
tie-up talks.
So you've previously sort of compared this rate-cutting cycle to the insurance cuts in the 90s. And in both of those instances, the Greenspan Fed took those cuts back after a while. They raised rates again fairly quickly. And I guess I'm just curious what the onus is for doing that in this cycle. What would make you guys decide it's appropriate to raise interest rates again?
Powell says
So,
does not see any danger of inflation
The reason
moving
why
up
we raise
significantly.
interest rates is because, generally, is because we see inflation as moving up or in danger of moving up significantly, and we really don't see that now. Inflation moved down in the first quarter of this year. We thought that that was due to some extent to idiosyncratic or transient factors. That turns out to have been the case, so it's moved back up. But it seems to be settling in below 2%. So we really don't see that risk. Inflation expectations have also kind of moved down and sideways, both surveys and market-based over the course of this, of really the recent months. And, you know, we think that inflation expectations are very important in driving actual inflation, and we're strongly committed to achieving our 2% inflation objective on a symmetric basis. We think it's essential that we do that. So we're not thinking about raising rates right now. There obviously will be times in the future where that will be appropriate. What we're really thinking now is that our current stance of policy is appropriate and will remain so as long as the outlook is broadly in keeping with our expectations.
Steve Leisman, CNBC. Mr. Chairman, I'm not to make light of it, but I'm a little bit, I don't know if you can help me out with the appropriate understanding of the word appropriate here. So the statement says that the committee is going to monitor the implications of incoming information for the outlook as it assesses the appropriate path of the target range. That tells me you could go either way. You came in and you used the word appropriate, that the current rate is likely to remain appropriate, which means you're on hold. So how do I walk away from this, and what should we walk away from this believing what appropriate means? Are you on hold and need to be proved wrong that you should remain on hold, or is it really you could go either way here? Thank you.
So we think that the current stance of policy is likely to remain appropriate, as long as incoming information about the economy is broadly consistent with our outlook, which is a positive one of moderate economic growth, strong labor market, and inflation moving close to 2%. That's what we're saying about that. We also say, of course, if developments emerge that cause a material reassessment of that outlook, we would respond accordingly. So that's really how we're thinking about it. I can't point to one data point or one thing that would change our minds. It would be a reassessment of, a material reassessment of our overall outlook, which is what I described.
I'm sorry, just to follow up. Why isn't the phrase likely to remain appropriate in the statement if that's the sense of the committee?
Well, there's a lot of practice and science and history in terms of how much you put in the actual post-meeting statement as opposed to what we say in the press conference statement. It's a it's a judgment call. I'm saying it now, so.
Thanks.
Nick.
Thank you, Nick Timmeros with the Wall Street Journal. You described the recent slide, Chair Powell, and inflation expectations as unwelcome. You said that inflation expectations are very important. What, if anything, would the committee be prepared to do to address this slide in inflation expectations if it continued?
So, as I mentioned, we do think that inflation expectations they're quite essential, quite central in our framework of how we think about inflation. We need them to be anchored at a level that's consistent with our symmetric 2% inflation goal. We think that we need to conduct policy in a way that supports that outcome. That's what we're doing now. We're also, as part of our review, looking at potential innovations, changes to the way we think about things, changes to the framework that would lead us.
I just wanted to let you guys know that I sold the QQQ calls at 0.95. They're currently 0.97 by 0.99, but I got rid of those. I had to jump into some swing trades here.
Make that symmetric 2% inflation objective more credible by achieving symmetric 2% inflation. And it comes down to using your policy tools to achieve 2% inflation. And that is the thing that must happen for credibility in this area. So we're committed to doing that.
Our Beyond trade is looking great here. We just picked that up.
So we're in the middle. We're really quite in the middle of it
$300
now.
on it, up
my
6% already.
thinking is still that it will run.
That's going to be a nice trade.
Into the middle of next
year. I'd be looking for
these
a couple
these
$1,000
changes
gain
to
on
monetary
that trade.
policy frameworks happen They don't happen really quickly, let's say. Inflation targeting took many years to evolve. I don't think we'll take many years here. I think we'll wrap it up around the middle of next year would be my guess. I have some confidence in that.
Edward Lawrence with Fox Business. Thank you, Mr. Chairman, for taking this. So how big of a change then to monetary policy would there be if you get some of that uncertainty cleared up, specifically the Phase 1 China trade deal finished and USMCA ratified? How big of a change could that be to the monetary policy as it stands here? And could we see rate cuts next year? Rate hikes next year, I'm sorry.
Rate hikes for next year.
Yeah, because I've heard the argument that trade's causing the uncertainty is keeping the prices low. I've heard that argument from a Fed president from one of the districts. So you remove that uncertainty, prices then would naturally rise. So then could there be a point, or how, I guess my question is how big of a impact on monetary policy would removing that uncertainty?
So I would just say that if we were to have a sustained reduction in trade tensions, broad reduction in trade tensions, and a resolution of these uncertainties, that would bode well for business sentiment, which is trade uncertainty has been weighing on business sentiment in our judgment and the judgment of many analysts. And ultimately, it could affect activity. I wouldn't expect that the effects on activity or confidence would be immediate, or would there be immediate effects in economic activity. I think it would take some time after the recent things, but I do think it would be quite positive over time. You come back to the question of raising rates, so that's really about inflation. And we haven't yet, we just touched 2% core inflation, to pick one measure, just touched it for a few months, and then we've fallen back. So I think we would need to see a really significant move up in inflation that's persistent before we even consider raising rates to address inflation concerns.
Brendan Greeley, the Financial Times. The other thing you've talked about in this review is the gains that a super high-pressure labor market have, particularly for the communities that you're talking about. You mentioned it just now when you were talking. If that's something that you're identifying and that's something that the Fed is learning more about this year, why not continue to push those gains, particularly for people who are reentering the labor force?
Well, I think we're doing that. I mean, I think we're
TIF, Tiffany,
I think we've made
headline.
Very substantial adjustments to policy over the course of this year, if you think about it. We entered the
LVMH to
year
meet with Tiffany on
rate
October
increases,
18th with $14.5 billion deal
It's
offer.
a very substantial
That's
shift,
TIF.
and the effects of it will be
That
felt
from
over time.
Bloomberg.
So we feel like that those shifts are appropriate to support exactly the outcomes.
Shares
we're
of
talking
Tiffany
about,
dropping
which
here
are a continuing strong
on
labor
that
market,
headline.
strong job creation.
Describe the shifts that you've made so far. It wasn't just about trade uncertainty. It was about specifically these kinds of high-pressure labor gains that you've talked about.
Well, no, it was, so we've said it was about three things. It's been about the slowing global economy. You have a synchronized slowdown in economic activity around the globe. It's been building for just about 18 months now, and that's having an effect on U.S. activity. That's part of the weakness in manufacturing, export, and business investment. We've had trade policy uncertainty, which we think also has been weighing on activity and investment and sentiment. And we've had inflation, which we've called out the risk of inflation running persistently below 2% as a risk that we needed to address. So we've been doing it to address all of those things. I would say the gains in the labor market have been great to see. It's particularly the fact that people at the lower end of wages have been getting most of the benefit of most of the wage gains in the last couple of years. That's a great thing. You know from our Fed
Shares of
Listens
Tiffany
events
hitting
that we've been
122.40
hearing
now,
from people who live and
123.32
work
as the
in
New York
low-income
Post
communities
reporting that a top
this is the best labor market they've seen in
LVMH
their
executive
lifetime,
met with
things like
Tiffany
that.
CEO on October
And
18th.
by the way, that there's
with a
still so many
$14.5
people
billion
who are,
buyout offer, according to sources.
still not in the labor market yet, and that there's just a lot more good that can be done there. At the same time, we have to think about the whole economy. And but yes, those gains are very positive. We do call them out. They are a reason for us to want to extend the expansion, and that's something we're committed to doing.
Victoria.
The Fed's balance sheet, you all recently resumed purchases of Treasury bills, and I was just wondering, how long do you expect that to continue? And given the fact that the repo operations, it seems like the Fed is having to increase the amount of.
That's really incredible, guys. The Q's now at $1.18. Here's what they're going for now: $1.18 by $1.19. I sold them for 95 cents. Big mistake, but we are in the green. $1.20 by $1.23. Unbelievable. Let's look for more day trades here, right around 3.
During the various fluctuations that you see with reserves is something like 1.45 trillion or a little
Powell
higher.
says the
And that's
Fed
the level in
sees
early September.
$1.45
So we're gonna be adding
trillion
reserves to get
as
that-
the minimum
to
level
that
of
place.
reserves.
That's one thing. There are also, it may be, one thing that was surprising about the episode was that liquidity didn't seem to flow as one might have expected. We had surveyed the banks carefully about what was their lowest comfortable level of reserves. And many banks that were well above that level did not take that excess cash and invest it in the repo market at much higher rates. They didn't do that. And so the question is why? And are there things that we can do that adjustments that we could make that would allow liquidity to flow more easily in the system without in any way sacrificing safety and soundness or financial stability? So we're looking at those. Those are not things that can happen, that can really address the situation in the short term, but those are a range of things that we're looking at as well.
BABA, Alibaba,
Howard Schneider with Reuters.
eyeing Hong Kong listing as early as November to raise up to $15 billion. That, according to Reuters sources, that's Bravo Alpha, Bravo Alpha.
Insurance. Is it the response you're seeing in housing and other parts of the economy, arguably to the cuts made so far? Is it the fact that the risk environment
Shares of Alibaba getting a pop here on that headline from Reuters.
Or is it something different, in the financial markets, the fact that the yield curve has righted itself, et cetera?
Honestly, it's really there isn't any one factor. It's really the whole range of economic data and also what we see as about our stance of policy, which we believe is the appropriate stance. It's really both of those things. Again, if you look at the performance of the economy through this, the consumer sector has been quite resilient. Witness today's GDP report. And it's just, again, all the things I went through earlier suggest that sector continues to be strong. We know that the manufacturing, investment, trade, export sector has been weak. That continues, but nonetheless, overall, we've got an economy that is showing moderate growth. And we think that today's setting, we're now at 1.5 to 1.75%. That is, we believe, an accommodative level and a level that will support that outlook that we have.
Really, this is kind of a one-legged recovery, that unless you get some impetus from other things, exports, investment, that it's going to weaken further at some point?
We don't see any evidence of that. What we see is that the consumer sector continues strong. Again, low initial claims. It's all the data we monitor. Obviously, a very broad range of data. We also see now, I think, more clearly the effects of more accommodative monetary policy on various kinds of consumer activity. You're seeing strong durable goods sales. You're seeing housing now contributing to growth for the first time in a while, 0.2, I think, this quarter. And you're seeing retail sales. The retail sales number, the PCE number, as I mentioned in today's release, was 2.9%. So that's good. And I think more broadly, monetary policy is also supporting household spending and home buying by keeping the labor market strong, keeping workers' incomes rising, and keeping consumer confidence at high levels, where it currently is.
Okay, Scott Horsley with NPR. Thank you, Mr. Chairman. You're just talking about how the lower rates have affected consumer behavior. Is there a concern that there's just less potency on the business investment side, that you're, in effect, pushing on a string?
Well, I think monetary policy works through the channels that we understand. I think the effects are clear in what we
Coming
think
up
of as the interest
after the
rate
close,
sensitive
earnings from
sectors, which are
Apple,
some of the ones
AAPL,
that I
that's
mentioned.
coming up at
I think
4:30 p.m.
I think
Eastern
interest
Time.
rates are a factor.
Coming up
in,
at
in
4:05
business
p.m.
investment,
FB
I don't
Facebook.
believe they're the main factor, a main driver.
Also, SBUX,
And I think,
Starbucks,
you know,
ETSY,
what
Etsy,
one would like to
LYFT,
see
Lyft,
to
WDC,
support
Western
greater,
Digital.
manufacturing activity, business investment,
Earnings
exports
from
would
CRE,
be a global
CREE, right
recovery.
after the close
And,
at
you know,
4,
there's a lot of monetary policy
MGM at
accommodation and some
4:15
fiscal
p.m.
accommodation, maybe, in the global economy now, not here, but perhaps elsewhere, and that should support growth in the global economy, and again, resolution of our trade issues would contribute to that over time as well.
Thank you. Chris Rugaber at Associated Press. You mentioned Fed Listens a couple of times and what you've heard from people there about how it's benefited disadvantaged or lower income workers, the hot job market we have. Has the Fed thought about institutionalizing something like Fed Listens and maybe taking in some of this input from people that you don't always hear from? Things like the Beige Book focus on businesses. Has there been thought of bringing in folks, say, from community groups more regularly? Thank you.
We think that Fed Listens has been a great success for us, and I'm sure we will repeat it. In fact, I would imagine that this entire monetary policy review will become institutionalized and be done every few years. I would say this: in the Beige Book, we talk to educational institutions, healthcare institutions, community groups, labor groups. It's not just businesses.
Alibaba,
and by the way, all of those groups are also
highs of the day,
represented on the boards of our regional banks.
177.66.
We also
on
meet
that
quite
report
regularly at the board with representatives of
Hong Kong
low-income
IPO
communities, and so we're very
appearing
conscious
to be happening
of, that
next
we represent
month,
all Americans,
raising
and we
up to
need to hear all
$15
of their
billion
perspectives.
according
That's
to
why
Reuters.
we
Guys, quickly, I want to go over. People say, where's the link every morning? Okay, so to get to our live YouTube, when you're in our live trade room every morning, when you become a member, go to live trade room. That's first and foremost, most important thing of our service. And then you can watch our trade feed and portfolio. Trade feed's most important for the trades. Live trade room, that's where I am now. That's where I am all day. For our live YouTube in the morning or whenever we're live, click right here, YouTube Live, and that will make you a live video. And make sure you guys subscribe to our YouTube channel, and you'll get desktop notifications and cell phone notifications whenever we go live or post a new video or content. These calls now, look at that, $1.29 by $1.30. Oh, $1.30 by $1.32. Look at that. Unbelievable. Does anyone still have the Q trade? Unbelievable. Just not my day, I guess. Still having a pretty decent day, though, above here. Day's still going pretty good, up about $1,000 unrealized with our current trades. Not too bad. Look at that go, those Qs. Here it is here, $1.31, $1.32 by $1.33, and still climbing. Our Beyond trade's up 6%, $300, looking good. Did anyone keep the QQQ trade, or did you guys sell it?
Them to do something
Unbelievable. So upset about that.
I'm not asking Congress to do anything right now. I sometimes have noted that it would be appropriate. I put it this way. We do what we do, which is we're assigned a job, which is maximum employment and stable prices. We do financial stability. We do bank regulation. The U.S. economy faces significant longer-term challenges around potential growth, around labor force participation, around disparities of income and wealth, around all kinds of things. And those are issues for Congress. They're not issues for us. But if you really want the U.S. economy to be all it can be and raise the potential growth rate of the United States, you need proper monetary policy. But really, it isn't monetary policy. Really, it's fiscal policy that supports, inclusive growth.
Don Lee with the LA Times. I think you said, Chair Powell, that the primary positive development in risk to the outlook was on trade, and specifically the prospects for a phase one agreement with China. But given the ups and downs of the trade dispute and that several truces and tentative deals have fallen through, are you concerned about developing monetary policy guidance, if you will, that's dependent on good part on the wins of the trade negotiations?
Yeah, I know that's not how I would characterize it. I noted that it may be that there's been progress there toward away from bad outcomes and confrontational outcomes, and it seems like there's the makings of a possible settlement there. I didn't say we're baking that in or anything, but I'm just noting that that's the case. As with Brexit, it's still quite uncertain what will be the result of the election and what the ultimate result will be. But I would say that the tail risk of a non-negotiated, no-deal Brexit seems to have decreased. Just as I would say that the situation in our trade negotiations with China seems to have taken a step closer to resolution. That's all I'm saying.
The phase one agreement then doesn't work out, then we
Fed's Powell says it seems like there are the makings of a U.S.-China trade deal.
monetary policy that would.
That's one factor among many, many factors that factor into our assessment of the outlook. And if things happen that cause us to materially reassess the outlook, change our assessment of the outlook in a material way, then we would act accordingly.
Virginie and then Paul. Virginie Montet with Agency France Press. Thank you. The Fed has pointed out many times in the past the rising inequality over those past decades and how that could be a factor behind a sluggish growth. In light of the recent outcome of the strike at General Motors, do you see the union having a role to play, helping to raise lower and middle incomes and promoting more shared growth on the long run?
So not for us to say what the appropriate labor arrangements will be. I will just say on the General Motors strike, it's likely to
Being more shared growth on the long run?
So not for us to say what the appropriate labor arrangements will be. I will just say on the General Motors strike, it's likely to
Being more shared growth on the long run?
So not for us to say what the appropriate labor arrangements will be. I will just say on the General Motors strike, it's likely to
It's having a hard time doing that while we're live here. We got so many live things going on. It does not want to keep that Jerome Powell on live. Guys,
Looking for a marketing automation software that does it all? Introducing Fresh Marketer, the intelligent
huge
marketing
breakout
automation
momentum on
solution
Beyond.
for
We're
your
up
business.
$450, up 9% on that trade already.
On the long run?
So not for us to say what the appropriate labor
Powell
arrangements
says
will
the
be.
Fed does not see any asset bubbles.
I will just say on the General Motors strike, it's likely to
Does not want to go.
This is a clear aligner. Actually, it's a nighttime clear aligner. They're new and only available at Smile Direct Club. Go from a smile like this to a smile like this while you sleep for 60% less than braces. New nighttime clear aligners, only at Smile Direct Club.
back up so that reserves move up and down with some volatility. We don't want them to move below the level they were at in the beginning of September, which is, again, between 1.45 and 1.5 trillion. That's the main thing. That's the first thing. And we're on a path to do that between our temporary open market operations and also our bill purchases. In addition to that, we're looking at there are.
Guys, can you hear everything fine
It's
now?
a big, complicated marketplace, and there was one of the surprises,
should be able to hear everything
as I
fine right
mentioned,
now.
was that banks that had told us that their lowest comfortable level of reserves was here, they were well above that, and yet they didn't deploy that liquidity when there seemed to be great opportunities to do that. That didn't happen. So why is that? And so we're doing careful analysis of that. You ask, would we lower capital or liquidity requirements because of this? I don't think so. I don't think that's where this goes. I think where it may go, though, is to look at, for example, intraday liquidity, which used to be a common thing. It used to be a common thing for banks to have intraday liquidity from the Fed, what are called daylight overdrafts. That's something we can look at. Also, there are just a few technical things that we can look at that would perhaps make the liquidity that we have, which we think is ample in the financial system, move more freely and be more liquid, if you will. And those are things we would do, but only if we can do it without compromising safety or soundness or financial stability.
Thank you very much, Chairman Powell. Now it's Aoyama from the Asahi Shimbun, a Japanese newspaper. Given this sustained level of low inflation, even in this country, do you think there seems to be a higher possibility that lower inflation expectation will remain going forward? So do you think a Japan-like situation or Japanification of chronically low inflation and interest rates, the U.S. is getting trapped by the Japanification of this situation? Do you think so?
So we of course have watched the situation in Japan and now the situation in Europe, and we note that there are significant disinflationary pressures around the world, and we don't think we're exempt from those. But of course, if you look at our current inflation performance, it hasn't been anything like what we've seen in those other places. But we don't think we're exempt from those pressures, and we are therefore strongly committed to having inflation expectations anchored at a level that is consistent with a symmetric 2% inflation objective. That's what we're committed to, and we'll use our tools to achieve. So we take the risk very seriously. The risk isn't that inflation might run a couple tenths below 2%. The risk is that what we've seen is other economies getting on a disinflationary path that it's been very hard for them to get off. Once inflation expectations start sliding down, inflation moves down, you have the interest rates move down as well because there's an inflation component in interest rates. And we think the right thing to do is to do what we can now to hold and really move inflation expectations up so that they're squarely and firmly anchored at a level that's consistent with 2% inflation.
Okay, Brian.
Hi, Brian Chung with Yahoo Finance. Another type of balance sheet question, but not necessarily focused on the repo crunch. There was a discussion before that maybe we should move, or rather, the Fed should move to a more neutral balance sheet, trying to remove some of the
we now have an
securities that are on the balance sheet and maybe
11.45% gain on our BYND trade,
treasuries.
which is
not
around
any,
a
I haven't really heard an update on the
$555 gain.
the composition of the
But
balance
that's
sheet for
still
right now.
climbing. We're
I'm
up
just
almost
wondering if the Fed is
600
actively thinking about that right now, and if so, when we might expect to hear something
for it.
on that.
Last trade at 540.
It's an issue, but it's not an issue that we're currently working on or reaching a decision or anything like that. The question of the longer run maturity composition of the balance sheet is a big one, and it's one we'll return to over time, but not imminently.
Okay, Vivian with the BBC for the last question.
Chairman Powell, this morning the President tweeted that we're seeing the greatest economy in American history. I just wondered, as the chair of America's central bank, what you made of that
Powell
characterization.
news conference ends.
I'm going to maintain my long-time practice of not commenting on any elected official.
Alrighty, his news conference just ended, team. Now let's take a look. And
S&P futures hitting the highs of the day.
S&P futures now hitting the highs of the day. It's a little after 3:17 p.m. Let's take a look and see what's going on. We're up around 12% on our BYND trade, up around $600 on that right now. Amazon, let's take a look at Amazon here. I'm so pissed off with the Qs. They're worth $1.35 now. We sold those for 95 cents. Missed out on an extra 60% gain on those. Alrighty, so let's see, we got beyond there. Let's take a look. What's the other trade? We just got Amazon. We have the Amazon 30 contract, 1777.50, 1780 vertical bull call spread for the November 1st expo, and we paid $1.30 a contract to be worth 250. 2.5, divide that by 1.3. Our max net return on this trade is 92.31%. And our max gain on that is going to be as long as Amazon's above 1780 by this Friday's expiration on November 1st. So Looking at today's chart, she's looking great. Came down to some support from earlier. So she's starting to climb now. Candle above the 1020 and going to continue in the breakout momentum, but no MACD cross yet, so got to keep an eye on that. But if we change to a 3-month daily chart, we could see she's been holding a nice tight consolidation box. Let's draw a little something around that consolidation box that we're looking at here. So here is that consolidation. Why is that not? Let's see. Okay, let's see here. Pen, pencil. There we go. All right, so here is that tight consolidation box that we have right there. That's consolidation. That's some consolidation right here. And like I said, if we get a candle above this box right here, we get a candle above that, then there's no doubt in my mind she's going to look for that 1825, which is going to be the next resistance, which is also going to be our target. Okay, so we get a breakout above this box here, which is going to be right around 1785-ish. Let's take a look here. That's going to be our target, though. That's going to be our entry for a swing trade. She's looking good now. She's above 1780 now and climbing. That's looking good. So if we take a look at our spread here, take a look and see what's going on with that. Here is that spread. And you're going to see that continue to climb. So obviously the long call is what we're worried about. As long as that's in the green here, that's good. The short leg, that's obviously going to lose money as the stock climbs. So being that this is a bullish trade, a vertical bull call spread, our max gain is above 1780 a share, and as long as it's above both of these strikes, we don't have to do anything. If you have level 4 options, I would sell them on expo date, but as long as you're above 1780, you have your max net gains, and that is great. So that's looking good, and I'm very happy, very pleased with our current trades here, and looking forward to the rest of the week here, guys. So if you have any questions, please let me know, and I'd be happy to answer those for you. Those Qs are now at about $1.40, and I sold them for 95 cents. So upset. So where I sold it at 95 cents, so we're now worth $1.40. 1.4, divide that by 0.95. If I kept it at that price, that's a difference of a 47.37% gain I would have had from where I kept it at, or where I sold it at. So very upset I sold that, but would have made an extra 1,500 in the account if I held that. But we have that beyond trade now, and that's looking really incredible. And I might be adding to that. It's up to $5,400 right now. So we'll see how that goes the next few days here. I might increase that to a $10,000 trade.
S&P futures spiking here at 30.47.
We are hearing reports of a rocket seen heading toward Baghdad's green zone, and a blast has been heard, according to a Reuters witness. Boeing CEO Dennis Muilenburg now says he anticipating that this year's annual bonus cycle is zero payout for executives, including himself. Arrow Corporation, AROW, has now approved a 2020 stock repurchase program. Numbers not released yet. AROW. AROW. Arrow Financial, AROW, now says that will be $5 million of repurchase program. AROW. Quick check on S&P futures here now of 0.23% here, 3042.
Coming up, earnings from Apple, AAPL, that's at 4:30. Facebook coming up at 4:05. Starbucks, SBUX, Lyft also. Western Digital at 4:05.
Hello. Hey guys, sorry about that. I had to turn the microphone off for a second there. I actually got a call from the IRS. I had to give them some information on employee taxes. Anyway, only 6 minutes now until closing bell, so holding on to the Beyond trade. Also holding on to the Amazon trade. Amazon's looking pretty good, 1779.48. Very happy, very pleased. Now she's at 1790, 1779.27, continuing to climb. She's in the breakout momentum cycle, breakout momentum phase. As far as anything else goes, guys, I'm going to make up a list now. I'm going to actually take my laptop and go over to the pool for a bit. It's a really hot day out today, and I'm going to look at some good swing trades for us to enter for tomorrow's. We'll enter tomorrow. I think we'll probably go with the November 15th monthly expo, but we definitely have some really good day trades to jump into. Guys, if you guys like these live videos, please go up to the YouTube video there and give this a like. Give this a thumbs up. I'd really appreciate that.
Earnings on Facebook.
Facebook after the close today,
$1.91,
guys.
and
What do
that's
you
coming up
think? You think about entering into
in
a
the
small
first
trade?
5 minutes or so after the close.
I'd love to jump into something on Facebook here, even if it's an out of the money spread. Let's see, it's 356. See, that to me that's pretty cheap. Let's see if we did something like the November 15th. What if we did the 207.50, 210, 25 cents. That's a 189. Multiply that by 1.15. 189, multiply that by 1.1. So that's only about a 10%, 12% gain there that you need to have. I think I'll pick up the 190 strike. I'm just going to get 1 or 2 contracts. I'll get 2 contracts. Call, expiration. Go with the November 15th, you think? 195, what are they at?
ATEN, A10 Networks, says on October 28th began implementing a workforce reduction of about 5% of company's workforce. That's Alpha Tango Echo November.
Yeah, I'd rather go with the November 15th. I'm going to make a small trade. What do you guys think about that? 2 contracts, $800 trade. Yeah, I'll jump in. What the heck? There we go. We're in it. I'm only risking $800 on it. Small trade. Playing it through. Yeah, I drive a Zamboni said he's playing it through the queues. That's a smart thing to do. That's what I should have done. Played it through the queues for tomorrow's expo. Maybe I still have time to do that quick. That's in BDM now. Let's see now, 197. They are so cheap too. So cheap. I should get rid of that and jump into these. But we also have Apple after the bell as well today, guys. So big day today. Huge day. I want to do a class too. So you guys, could you guys please, in the comments on YouTube, can you guys let me know what type of class do you think would be most beneficial for me to have for our students and our members? Please tell me what you'd like me to do class on, whether it be spreads, calls, puts, risk management, money management, trade management, how to grow an account. Just give me some topic ideas through the chat on YouTube, and I'm going to be glad and happy to do some classes here, because now that I have all the equipment, software, and everything I need here to do these videos, I'm really excited to get started on them. So please, guys, just let me know. I'd really appreciate it. I'm going to let you guys listen in live too as well, so we can listen into earnings after the bell here.
IMMU, Immunomedics, reporting a loss of 49 cents, wider than the loss of 40 cents that was expected for IMMU. TTMI is halted pending news. Tango Tango Michael India. CPSH, CPS Technologies, reporting revenue of 4.4 million. CREE, Cree reporting a loss of 3 cents. The estimate was a loss of 5 cents for Cree. So that's better than expected, a loss of 3 cents. Revenue of 242.8 million. That's also a beat for Cree, CREE. DDD 3D Systems reporting a GAAP loss of 15 cents. The estimate was a loss of 5 cents. Revenue coming in ahead at 155.3 million for CREE, Cree. Adjusted loss of correction, that's 3D Systems. Adjusted loss of 4 cents on 3D Systems is better than the 5-cent loss on Delta, Delta, Delta. So that's a beat for 3D Systems, Delta, Delta, Delta. Also a beat for Cree. JBHT, JB Hunt. JB Hunt reporting $1.10. The estimate was $1.45 for JBHT. ACIA, Acacia Communications, reporting 0 earnings. $0.60, the adjusted number, 60 cents on ACIA. HUB, Hub Group, that's HUBG, Hub Group reporting 97 cents. The estimate was 80 cents on HUBG. Revenue of $913 million is below estimate for Hotel Uniform Bravo Golf. WDC, Western Digital, announcing CEO succession plan. That's Whiskey Delta Charlie. Steve Milligan intends to retire as Western Digital CEO. Will continue to serve as CEO until a successor is appointed. That's Whiskey Delta Charlie. CONE, Cyrus One, reporting adjusted FFO of 91 cents. Charlie Oscar November Echo. NUVA, Nuvasive, reporting 59 cents on revenue of 290 million. SBUX, Starbucks reporting 70 cents. 70 cents is in line for Starbucks, SBUX. Facebook reporting $2.12. The estimate was $1.91 for Facebook. That's a beat for Facebook. Revenue of $17.65 billion is also a beat for Facebook. FB, Foxtrot Bravo.
Guys, we got a huge beat on Facebook, both bottom and top of the line here. Stocks right around 192, 193 a share after hours. Big climb there, nice beat. Beat on EPS and on revenue.
SBUX,
So
Starbucks again.
It's not having that big of a pop though, like I
earnings.
expected. Retrace a little bit back down to 190 now. 191.
5% comp growth in China for Starbucks. Shares of Facebook hitting a high of $195, now at $192.76. Facebook says estimates that around 2.2 billion people now use Facebook, Instagram, WhatsApp, or Messenger
all that
on
stuff.
average every day.
That's great. Happy with
FB,
that trade.
Facebook with that earnings and revenue
So
beat.
now, guys, with
WDC,
that beat, I
Western Digital
am
reporting
positive
34 cents.
I feel Facebook's going to go.
Charlie.
And watch this now. So with that positive earnings beat for Facebook, it's at 195 now after market hours. There is no doubt in my mind when we're taking a look at the, let's look at the one-year chart here. There's no question in my mind, A, that she's going back up to 200, and B, she's going to go for new all-time highs.
Estimate revenue of
there
$4
is
billion
no question in my mind, guys. There she goes,
WDC,
196.
Western
She's
Digital.
continuing to climb here after hours, almost nearing 197.
Facebook off the
at
highs, $195 now, up almost
really
$7
nice
at the high.
Nice climb here, guys. Really nice climb. We are looking great. Very happy and very pleased. Alrighty, guys, I'm going to shut this off now. Really happy, really excited for tomorrow's trading. We're going to be having some nice
Digital
gains this
dropping
week. Nice
to
gains. Let's continue with this, and let's look for some swing
down
trades
about
tomorrow,
$6
guys.
at the low.
Thank you,
on
guys,
that
and I hope you guys have a
earnings
great
report.
night. If you are not with us yet, you could go to our website and join www.thesantorelliexchange.com right down here, and join us. Use promo code TRADELIVE and come join us, guys. Tom Tag Lang says, good work, Dave. Thank you, Tom. I'm looking forward to much more capabilities coming in the future here. I got a lot planned for us, so let's continue. Guys, we're going to be going over the trade challenge this weekend. I'm going to make the details on it, and we'll go over that sometime next week. So maybe we'll start that for first week in November. That way maybe it could be like a growth account for holidays or something for people. So great job today, guys. So here, as part of transparency and honesty, this is what I want to share with you guys, show with you guys how we did today. I think that's the most important thing you could have in a trader is honesty and transparency. Zynga shares are having a big pop here, guys. Today was not my best day. First off, let me get rid of Facebook. New highs, guys. Nice. 196. Twilio. Twilio dropping sharply. They're dropping sharply, very sharply, he said. Alrighty, take a look now. Here is my day, and here is how it ended. Not the best day, but that's part of trading. We had a realized loss. Here's a realized loss, $2,378.19, and that was today, October 30th. Here are the opening transactions, closing transactions, and the biggest one by far was from MasterCard. MasterCard was that big losing trade, and if I held it, that's what upsets me the most there. If I held it, I would have had some really nice profits on that. Let's see where that ended today. Oh, man, that sucks. That really sucks. If I held that MasterCard trade, I would have been up a couple $1,000 instead of being down on it. I might be entering. If we get a green candle above 277.67 tomorrow, or let's say above 278.50 tomorrow, I'm going to be entering into a December 20th call on MasterCard and look for that breakout from 285 to 295. Because there's definitely some good potential there. I might even make a larger trade. Maybe like a, let me share with you guys quick. I'm definitely going to be doing a trade on MasterCard tomorrow as long as we have a pop there. Twilio's out with earnings. That stock's not doing much of anything. She's having a drop. Lyft dropping as well. Lyft having a big drop. LYFT. Wow, that LYB actually looks pretty good. I love when you put in a wrong symbol by accident and you look at the chart, you're like, wow, that's something I haven't seen before. It looks good. LYFT. Wow, right up to that 50 and failed. Alrighty, guys, so I'm going to end this now. Facebook's got a nice pop, 195. Keep that open. Excuse me, guys. So I'm probably going to be entering into a MasterCard trade tomorrow and a Facebook trade. Let me write that down here. MA Facebook. And I'm also probably tonight I'm going to start the beginning phases of the trade plan, how it's going to work, and what's going to happen with that. So I'll let you guys know. And if you guys have any questions, like I said, if you guys could do me one big favor, go to the YouTube video that we just made that we're in now. Go to the chat and tell me in there what you guys would like class on, or what's something I could help teach more throughout the day while we're just waiting for these chart setups. So if you guys could let me know, I'd really appreciate that. And I will see you guys in the morning. Alrighty, guys, take care. God bless, and I'll see you tomorrow. Great job today, guys.